Welcome back. The Federal Reserve is set to release its final decision of the year regarding interest rates later this afternoon.
The Fed is expected to cut rates once again. This will be the final interest rate decision before President-elect Trump takes office next month, which begs the question, will these rate cuts continue in the new year?
We've got CNBC senior economics reporter Steve Leisman joining us now with a preview. Steve, good morning. Thanks very much for being with us. So what do you think we can expect to see from the Federal Reserve today? What are you going to be on the lookout for also when we're reading any tea leaves for what we hear from Fed Chair Jerome Powell this afternoon?
Yeah, that's pretty much what we do, is try to read the tea leaves. I think they'll be pretty explicit about the following. They'll cut a quarter point, and then they'll say the next moves are much more what we call data dependent upon how the inflation numbers come in, how the growth numbers come in, how the unemployment numbers come in. Right now, they've been doing what they're calling a recalibration. That is essentially bringing down the federal funds rate from the very high levels of a year ago when they were battling much higher inflation. Inflation has come down. That is, the rate that prices are growing has come down quite a bit. So the Fed feels as if they can recalibrate or bring the rate down to a place that's more in line with where the economy is right now, where the inflation rate is right now. But because of a lot of uncertainty about the fiscal policies of the incoming Trump administration, there's a lot more uncertainty as to where policy goes. So they're probably going to signal a lot more caution in 2025.
Let's talk about what this rate cut and really just all the rate cuts this year mean for the average American and their finances. I mean, what do people need to do to make sure they're getting the best rates, whether it's a savings account or whether it's a loan or a mortgage right now?
Well, I think a couple of things. The first thing the average American should do is look at their debt and figure out that their debt is costing them more than they're earning in their savings account, which means that probably the best play for anybody still is to pay down their debt much more so than to get interest in a savings account. In a savings account, you probably want to keep it not in the bank. There are money market funds, government money market funds that are paying higher yields right now. They're still pretty elevated. So there's two things to talk about here. The first thing is, in general, when the Fed cuts rates, many consumer rates do come down. The interest rate on your credit card with a lag of about 3 months. Mortgage rates should be coming down. Auto loans should be coming down. That's in a normal situation. Right now, though, as the Fed has cut, interest rates have remained pretty steady, even rising a little bit higher. So there may be some delay in passing along that savings to consumers here because of what's going on in the interest rate markets right now.
Let's talk big picture. Walk us through the state of the economy at this point in time, as we're just a month away from a new president, from President-elect Trump taking office. What were the big economic takeaways from President Biden's time in office?
I think there's two ways to think about this, Savannah. I think the first way is to think about what the data show. The data show that it was a pretty good run for President Biden. The growth numbers were very healthy. We avoided a recession despite the Federal Reserve hiking interest rates, despite the pandemic. We came out of the pandemic sooner and more strongly than other countries did. We had a high inflation rate. It came down. And the unemployment numbers and the employment numbers were very, very good in terms of the ability to find a job. Wages eventually caught up with inflation. The other way to look at this, however, is through the sentiment of individual Americans, and they never quite felt it. And I think the reason is because you had that very high rise in the price level, and wages only later kept up with that.
Steve, thank you very much. We appreciate you joining us this morning.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.